how.
Evan, let's address the elephant in the room now. Okay, so you put out an announcement. I think some people kind of figured it out, some haven't. Okay, bottom line, who is it? Amazon? In other words, do you have a deal with Amazon to make the 3D models?
Obviously. So what's happened now is Kohl's, which has been a long-time customers, we're their single source supplier of 3D models. You give us a quote on 110,000 3D models.
Welcome everybody to Wall Street Reporter's next Super Stock live stream, August 3rd. We are back with NexTech NEXCF. Evan Gappelberg is CEO. Evan, welcome back.
Great to be back with you, Jack.
Evan, this is actually, I think this is really, our 3-year anniversary right now. This week or last week. Yeah. Yeah, that's right. NexTech first came on the program as debuted as a Next Super Stock. I believe it was August 2019 or late July or August 2019. Stock was about, I think, 50 cents US.
Yeah.
And, it was, the story was just people, the AR thing was still not well known.
It was early.
It was a little bit early. And then all of a sudden, little by little, the stock started to gain traction. Then it was $2. Then it was a short attack. Then it was COVID. Then it was a drop. Then all of a sudden, the stock started climbing. The stock started climbing a wall of worry on the way to 750 US, $10 Canadian. It was a 15 bagger plus. And now, we are back. We are back. Sort of back at the launch pad, like a lot of the tech stocks. This is the big opportunity for investors to have another bite at the apple. This is like
yes.
It's a great opportunity. So again, so anybody that's brand new to our program, the goal is here. We want to bring you these stocks which have 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities at a key inflection point right now, and multiple catalysts to ignite that increase in valuation. So listen, guys, the whole point of these live streams is for you to ask your questions. To Evan, ask your questions to Evan, ask your questions to the CEOs, and then decide for yourself if NexTech is going to be a 10 bagger, 100 bagger, 1,000 bagger again. I hope that's not too promotional. I don't want to sound, but that's the idea. So Evan, I think the big idea here is that, over the last month, I think people have been noticing that, okay, you've been coming onto the program more and more frequently. The cadence has been picking up. I think there's some momentum happening right now with contracts inside the 3D, the AR space. Can you bring us kind of up to speed on, some of the big deals you're working on right now? Because I think that's what the market really is looking at.
Sure. So first off, I think it's important for investors to kind of look at where we began and where we are today and where we're going, right? So it's, back in 2019, we've said this many times, it was early. Augmented reality was really just getting started. 3D for e-commerce was very cumbersome. The tech wasn't great back then. And the demand certainly wasn't what we're seeing today. And so today, the demand has shown up. We're pioneers in the space. We've spent 4 years toiling away. We've made 10 acquisitions in the last 4 years. A couple of those acquisitions have been transformative. One of them being ARway, which we're spinning off, we'll talk about later. And the other one being 3D AI, which is a computer vision AI machine learning company that we acquired last summer that was making 3D models for Kohl's and some of the other big box retailers. But what we really acquired was the artificial intelligence technology, the ability to scale 3D models, a content management system where we now host and manage and serve up millions of 3D model views. And so all of that now has manifested itself in our company. And when you look at our company today, it's very, very different than even just 60 days ago. We announced we were transforming ourselves and positioning ourselves in front of this Web 3.0, $5+ trillion mega trend, which is this shift of everything in the world of e-commerce from 2D to 3D. It's a massive, massive shift, very underappreciated.
Nobody's recognized it yet. It's sort of like
only one research report that's talking about this. That's all going to change in 2023. And
by the way, Evan, I think that's really what makes this so impressive, because usually when people are talking about a trend, there's a lot of hype. You keep reading it in the media. Usually those things kind of don't really pan out. It's overhyped.
Yeah.
But when you don't hear about something, it's sort of like a stealth bull market or a stealth. Those are the big deals. And I think, speaking of which, I think we have right now. I want to get back to. I just want to make a quick comment, and then we're going to go back to what you're saying. I think there's actually a stealth bull market that's been that started with NexTech over the last 45 days. The stock basically bottomed out around 35 cents Canadian. It more than tripled from there. We've had a pullback. So we had 50% correction of.
You're getting ahead of us. You're talking about the stock, Jack.
I'm talking about the stock, but we're going to get back. But here, I want to get back to the fundamentals right now, because here I'm going back to the fundamentals. So here's the thing. So right now the stock is it's been consolidating this range because the market right now is kind of looking for a signal. We've had some great news, and here's a question. We got an audience question, and this ties into it, right? We had some massive news, which usually would send these stocks, significantly higher, right?
Yeah.
So I think the market has been kind of digesting. And again, like Brian is saying, why hasn't the market reacted more positively? I think the market hasn't quite comprehended. Maybe they don't believe quite yet. We've been in a huge bear market in NASDAQ for a year almost.
Yeah.
So this is where the best opportunities present themselves. This is like.
Yeah. So I think you're right, Jack. So the backdrop is we were in a bear market. And so there's a high degree of pessimism and negativity, and investors are just kind of like spent. They're just, it's been a bloodbath, right, for the first half of this year. NexTech has been quietly positioning themselves for this mega trend, which we just spoke about, the conversion of a multi-trillion-dollar entire ecosystem from 2D to 3D. It's huge, and it extends way beyond Amazon. It extends to all the retailers, all of them. It doesn't, every single brand, every single retailer, every single store is now converting their 2D images to 3D, and it's just, how fast and how much is it going to cost them? That's basically it. And so when you look at NexTech and you look at where we sit today, we really sit right in front of this tidal wave, which is now starting to happen. We announced a very big, so let's go back to the transformation. We announced that we were essentially divesting ourselves of our e-com businesses. Just a quick update. It's going.
That was the legacy. That was the
legacy business. Yeah, that was the old, the vacuum cleaners and stuff like that. And so we've taken in over $500,000 in cash by just selling off the inventory that we had, which is fueling. That's essentially going to help us. We're reinvesting that into our ongoing future business, which is the 3D modeling business. We also recently announced a deal with Prime Marketplace. And I think, again, that the market is underappreciating.
Evan, let's address the elephant in the room now. Okay, so, you put out an announcement. I think some people kind of figured it out. Some haven't. Okay, bottom line, who is it? Amazon? In other words, do you have a deal with Amazon to make the 3D models?
Obviously, right? Do I have to say it?
The cat is out of the bag. Okay.
So it's pretty obvious, right? Everybody gets a delivery from Amazon every day. Prime Marketplace equals Amazon. Okay. It is what it is. Now, having said that, Amazon is, besides the fact that they're massive, they're massively pivoting to 3D, massively pivoting to 3D. We meet with them twice a week. Twice a week.
With Amazon people.
Yes, yes. And we are delivering models to them, but it goes way beyond that. We have a partnership with them. And, you know, again, I can't get into specifics other than to say that it is a massive, massive opportunity for NexTech and NexTech shareholders. If we only had Amazon as our only customer, we'd still be a home run investment. Now, hold on, Jack. It's really important to say this because, again, I'm here to just, you know, full disclosure. I want investors to know as much as they possibly can so they can make investment decisions.
Yeah, and we want people to make informed decisions. We want to be 100% transparent. And that's
landing a company like Amazon, it is like, imagine, I mean, you're a fisherman. We're all fishermen. Okay, you go out, you catch striped bass, maybe you catch some fluke, some flounder, bluefish if you're lucky, right? I mean, you know, okay. Has anyone ever caught a whale? No, I don't know anyone that's actually caught a whale, let alone a blue whale. That's basically Amazon. They are the monster in the ocean. They're the biggest fish. There isn't anybody bigger. And so if you think about that, that's an incredible accomplishment in and of itself. Now, take it one step further. They're hungry. It's a hungry whale. And they've changed their diet. They've changed their diet. They were eating plankton or whatever whales eat. Now they've decided, you know what? We want to eat 3D models. You know, they were going from 2D to 3D. They have a new appetite. It's shifted. And what are we? We're the chef. We're making 3D models, right? We've been perfecting our craft. And now we have a, you know, extremely hungry customer. And it's going to be very interesting how that relationship develops. It is early. I'm not saying, you know, they've ordered 1 million models. That's not what I'm saying. I'm saying is that this is going to be enormous source of business and stability in our business, right? Because again, it's not like they're ordering, you know, and then they stop ordering. It's basically, you know, multi-year type of deal where it's not going to end. It's just a question of, can we supply the whale with enough 3D models? Can we keep up? That's what keeps me up at night, is trying to figure out how to feed the biggest whale in the ocean. But it gets even more complicated for me because remember, we've been out there working with Kohl's and working on other accounts.
You have a pipeline. We've been talking about the pipeline, the growth pipeline.
We have a lot of customers, and they've all been doing, you know, essentially POCs. Some of the POCs were for 100, 200 models. Some were for thousands. So what's happened now is Kohl's, which has been a long-time customers, we're their single source supplier of 3D models. They've come back and said, you guys are 10 out of a 10. Those are their words. You guys have delivered. Can you give us a quote on 110,000 3D models? Can you quote us? Now, I'm not saying that the deal's a done deal. I'm saying our customer, long-term customer, is looking for more models, and they're looking now for us to quote on a massive, massive order. If that deal does come to pass, it's obviously game-changing. Now, again, my problem is that's not the only deal. We got the whale of whales. We have an enormous quote that we're working on. And then, you know, we're now working with the largest retailer. I don't know if it's the world, Jack, or, you know, just in the US. but everybody knows, you know, the founder used to drive a red pickup truck out of, I forget what state they're in.
Are you talking about the guy from Arkansas?
Yeah, that guy. So
you mention the name, or people can figure it out.
They could, I mean, if they can't connect the dots, I think probably shouldn't be, you know, right, investors, right? But my point is only this. I'm trying to paint a picture for our investors that there's not one whale. There's multiple whales. There's enormous, enormous demand. They are all asking the same question. How many can you produce? How fast? How many? It's not like we're not interested, or they're not tire kickers. Like in 2019, 2020, it's tire kickers. Yeah, you know, everyone was kind of interested, but now it's, we are being told by our CEO, this is what the CMO, the marketing officers, who we deal with, we're being told by our leadership that we need to go 3D. And so it's game on, ladies and gentlemen. It is game on. And we are perfectly positioned. Again, we're pioneers. We started out 4 years ago, raised 70 million, taken the company public early. But now the 3D modeling market is in full swing. Now, just to be clear, because I want everybody, again, this is full disclosure. We're not here to leave anything out. In the next 3 months, we're scaling production. After that, we scale again. To get to the massive scale, you're talking, you know, it's going to take time. I mean, when you look at anybody that's in any business, if you want to scale, it takes time. So this is not like instant. This is going to be a multi-year, multi-million-dollar type of, you know, business equation that I'm going to be wrestling with, right? Because the amount of demand, it's hard to put it into words even. The amount of demand is staggering. It's staggering. Hundreds of millions of 3D models. I mean, we produced like, okay, 15.
It's recurring revenue. Look, I think so.
Not all of it's going to be, not all of it's going to be recurring revenue. Okay. Now, I want to be clear here that the big whales, not all of them, like, okay, with Kohl's it is recurring. With you know, the Amazons and you know, the other big players, it's cash and carry. They want to own it. But if you think about it, because their demand extends for 3 years or 5 years or 10 years, it doesn't matter. It's the same thing as if signing up a customer who's paying you monthly. In fact, it's even better because you're getting paid more money up front, right? So, you know, as long as the revenue keeps on coming in, as long as the demand keeps on showing up over a period of years, as long as the customer is big enough, the cash and carry model works. It's just, you know, you just don't want to have a customer show up 1 month and then next month you got nothing.
Right. And also here's the thing. So there's two things. One is, you know, it gives massive validation, you know, for other big whales in the e-commerce space, or maybe they're smaller whales. Like this is the killer whale, whatever it is, the blue whale. And then you have the orcas or whatever it is. They want, because if they see that Amazon, which is, you know, best of breed e-commerce, like, and the reason why, I mean, the reason why they're using these 3D models is more increased sales, less returns. It hits all the things. And this is what everybody right now, all the players in e-commerce and tech, you know, because, you know, we're kind of in this, everybody's talking about recession. People want to cut costs, improve efficiency, increase revenues. And the 3D models lets them do that. So this is, basically it's a great deal for these guys. So I think there's a lot of tailwinds that are going to be pushing this massive adoption. I mean, we're seeing it now. We've been talking about it for 2 years, a year, you know, now we're seeing it. We're seeing it happen. And, you know, it's really, really impressive. Okay. So let's get to some audience questions, and then we'll cover some of the other things. Hang on a second. Oh, so one of the things, so somebody asked, okay, so why, and by the way, this is a great question. This is interesting. I think So why hasn't Brian is asking, why hasn't the market reacted more in other words, I think Brian is asking, like, why didn't the stock go to, like, $3 based on?
So I'm gonna tell you why I think anyway. Number one, we're off the radar. So, it's like, who knows about NexTech? You guys do, but there aren't a lot of people that really have been looking for the next hot stock. We mentioned the bear market. So in a bear market, people are just trying to, hang on and things like that. But in a bull market, it's like, hey, what's a hot stock? So if we had come out with this news during the go-go days of 2021, right, who knows what would have happened. But the fact is that a lot of investors got flushed out of the market. A lot of investors are licking their wounds. So listen, the smart investors are watching this show and are going to, be able to make decisions. As far as, everybody else that's, maybe a little lazier than the guys watching these shows, right? Because this does take commitment. It takes a lot of time to listen. Then, it kind of gives you a little bit of an advantage. But you can't predict when the market wakes up. I can just remind everybody that in 2019 and even 2020, I was talking about, a lot of amazing things that were happening at NexTech, and nothing was happening in the stock. And then all of a sudden, everybody decided they wanted to climb on board, and the stock went to 10 bucks Canadian. So there's, no telling when everything's going to turn. But I can tell you that from a business standpoint, things have never been better. And so, typically, as night follows day and day follows night, the sun keeps rising and setting. Typically, when things get good on the business side for a company, typically the stock reacts. And when things are bad, typically the stock reacts. Now, again, you can't predict. There's no guarantees. But at the end of the day, I've never felt better.
And here's the other thing, to be clear, is like, you never use the name Amazon. The name Amazon was not used in the press release because they're very sensitive. Like the big companies, they're notoriously sensitive about having their names included in a press release. But look, and so people were not sure. They're like, they think it is, but it's not official. And I think over time it's going to become more and more apparent. So
yeah.
Look, I think that's the reason. If you used Amazon in the press release, would be
well, yeah, totally true. I think what's going to happen is we've been told by Amazon that in I think Q4 they're going to come out with their own press release. I don't know if our name is going to be mentioned, but their own press release is going to be 100% geared towards 3D models of the future of Amazon.
Okay.
That, is, again, massive if you know who's going to benefit. It's almost like Apple has chip suppliers. There's a couple of public companies that supply Apple with chips. And when Apple's demand, when they report their numbers and the demand is up, those chip suppliers' stocks go up. And so as people become aware, I mean, we're the only public company that makes 3D models for Amazon. We're the only ones. So as people become aware of that, and at some point we're going to have to put it in our filings or what have you. So we'll become more prevalent, more knowledgeable in the market. So, it's only a matter of time. But it's not just about Amazon. Let's be clear. This is a much bigger story than that, right? So that's one part of our business. That's our e-commerce. But then there's also, the spatial mapping, the spin out, which is.
Can let's finish off on the e-com business, and then we'll talk about the spin out, because that's also very exciting. That's the potential baby unicorn. Okay, so the takeaway is this: essentially, you're getting these massive contracts with these blue chip things, and also, and they're expanding. That's the other thing. It's sort of like, you know, like Paul, I think he talked about this, the land and expand strategy. And this is exactly what's happening right now. Like, in other words, Kohl's, you know, you start off, I think originally a couple of years ago with like a small, you know, trial PO, I think PO is what they call proof of concept, small deal. Yeah. Then it got bigger. And now everything is, because I mean, they wouldn't be asking you unless they were seeing massive benefits and results, because it's really not cheap, right? These 3D models are not cheap.
You're right, Jack. We've talked about this over and over again. When you get a 40% reduction in returns, as much as a 250% increase in conversions online in e-commerce using 3D models and augmented reality, it's a no-brainer for the whole e-comm ecosystem. We're getting asked now for quotes for thousands of pieces of artwork. Imagine being able to see the art on your wall in your living room or bedroom or wherever you want to hang a piece of art, and see the size, see the look. It's as if it's there. It's no different. It's just, you know, it's an augmented reality representation of the 3D model that we build, and people end up clicking the buy button. And then the e-comm site ends up saying, wow, that worked really well. Let's order more. But first they test it.
Yeah.
Like, yeah, right. First they're going to do like, oh, let's try, you know, 25 or 50. But then once it works, they come back for more.
Yeah. So, and this, again, this really moves the needle for these guys. That's why they're doing it. Okay. So, and so here's the thing. I mean, for anybody watching this, I mean, I think as an investor, I would look at this. Okay. E-commerce, $5 trillion industry, you know, it's shifting to Web3. Everything is going to Web3. And, you know, what's the first thing they need? Like, what's the, you know, table stakes is 3D product. I mean, that's the first thing you need, right? And NexTech it's the pure play. It's the go-to source, the leader in the space. So at some point, the market is going to figure it out. Again, you know, right now we're starting to already see stocks bottoming out. And again, I'll stop with my market commentary. I know people, they want to hear. This is the okay. Is that internet connection? Can you hear me okay?
Yeah, we can hear you.
Okay. So again, like right now, what we're seeing, I think it's almost like, you know, 2003, like right after the big .com crash. And by the way, things today are happening these days. Everything happens much, much faster. Things are compressed. So back then, it took like, you know, 2 years for the market to bottom out. Stocks dropping, you know, 90%. And all of a sudden, they started bottoming out and they took off. Amazon, you know, I think was trading at like $8 in 2000 or some crazy low number. And their business in 2003 was probably 10 times bigger than it was in the year 2000. You know, so but the stock was, you know, and the same thing is happening now. So right now, these companies, you know, NexTech is, you know, it's becoming, the story is becoming real. Like the dream is becoming real, and the stock today is it's like back to where it was. It's like a ground floor opportunity.
I would even take it further because, you know, again, we don't talk about it a lot. We talk about 3D models, but we actually have a whole suite of software that complements the 3D models. What am I talking about? A showroom. So you could drag and drop into a picture of your living room, 3D models, and create an entire room. That's software. So it's the 3D models plus this ability to drag and drop into the room. And if you think about that, now all of a sudden you're your own home designer, you know, room designer. And then if you think about, so that's, you know, the value for the consumer. We also have something we're launching in the next, I think it's the next 30 days, it could be 60 days, where you can take these 3D models, put it in a studio, create a room, and take a photograph of it, and then use that as, you know, product photography. Product photography costs companies millions and millions and millions of dollars, right? Well, with 3D models, where it's a 3D model plus a 3D background, everything is just 3D. You're just designing this whole, you know, for magazines or what have you, magazine shoots. It's all done now inside of a studio, saving companies millions of dollars. And so all of this is converging. It's not one thing. 3D models is the driver, but then you also have this software that comes behind the 3D models that makes those 3D models even more valuable. You know, it's one thing to just be able to see a single asset. It's another thing to be able to design an entire house or an entire room with those same 3D assets. And so, there, you know, and then, you know, of course, the metaverse. We've talked about this before. Without 3D assets, there is no metaverse. It doesn't exist. So
they got, in other words, at some point, all roads lead to NexTech for in the e-commerce space. Speaking of which,
yeah.
What's happening with Shopify? Like, what's like right now? What's kind of the going on there?
So Shopify, WooCommerce, BigCommerce, we've integrated. We're continuing to see a flow of customers that come through the Shopify app, and it's, you know, chugging along. I mean, it's not nearly as big as, you know, the whales that we've been talking about, but it's continuing to trickle in. The model's continuing, you know, it just continues. It's a machine that's turning, and it's kind of on autopilot. You know, it's not going to be in 2022 anyway. The tidal wave from Shopify is not there quite yet. I think in 2023 it could show up, because what you're really talking about on Shopify is more the mom and pops.
Yeah.
Right. And they typically are following the big boys. And so as the big boys position themselves, next will be, you know, the mom and pops. And so we'll be positioned again. I mean, again, what keeps me up at night, Jack, is how the hell am I going to deliver for all these customers? Seriously, I mean, it's a good problem to have, I guess, but it's still a problem.
Yeah. So, okay. So I guess that's the question. Okay. So what's the kind of the, you know, what are the big challenges right now? Like, what's the choke point in the potential, you know, scaling up of like what you know, like of these big orders and everything else?
Yeah. So I spend a lot of time with my CTO trying to push automation. So, you know, AI, artificial intelligence, is the game-changing technology where I've seen some stuff in the labs that will take your breath away. It will leave you speechless. You will be trying to wrap your head around what you're looking at, as I was when I was looking at the AI create a 3D asset almost out of thin air. It was like it was giving birth to a table. It was giving birth to a couch. It was like forming, you know, out of a piece of fabric. So imagine the AI taking a piece of fabric and turning that into, while you're watching this, you know, it's a swatch. So it's like, you know, a square, and all of a sudden it's forming into a 3D couch or chair. And how does the AI know to do this? Yeah,
it's artificial.
It's smart. It's smart. And so
and that's the key. That's, by the way, and listen, that's why, you know, that's the key value of NexTech. Like the AI, I mean, we haven't even talked about this, but you know, really, like, you know, companies are paying billions of dollars. You know, those companies get bought routinely for billions of dollars because of, you know, some technology, not even like big revenues or whatever. And look, I think that the one thing we haven't talked about enough is the AI, the machine learning, that's behind being able to make these 3D models. Because do you remember, like, when you first came on the program a couple of years ago, it was like, how much work was involved? How much did it cost to make a 3D model then versus now? And speed, time, and money. How much was the difference?
So we consistently lost money on 3D models in 2019. It took us weeks to make a single 3D model. And, you know, in some cases it was $300, $500. Some cases it was $2,500 to make one single model. Bananas. So, you know, now it's, you know, a fraction of that. And so what?
And how much time? Like, how fast? How much time does it take to make the model now?
We're making, you know, in a day we'll make hundreds.
Okay.
Yeah.
So the speed is up, like, I mean, I don't know, it's like an order of magnitude.
It's a quantum leap.
It's a quantum leap. Okay.
Yeah. So the key is, though, is that, to really scale, we have to be able to make, just again, I mean, we're talking about massive, massive volumes. Just do the math. Divide 365. Let's just do the math while we're on this call. So if we want to make 1 million models, in a year, we have to be able to do, actually, I thought it would be a bigger number, only around 2,700 models a day.
Oh, it's not bad. Yeah, that's okay. 2,700. Okay. By the way, a million product SKUs is not even, that's not even 1%. I mean, how many product SKUs are out there? I think it's in the hundreds and hundreds of millions. We don't know what the number.
Possible to count, because and let's be clear, it's everything that's ever been made. It's everything that's being made today, and it's everything that will be made tomorrow.
There's more and more new products coming out every day.
It's literally endless. It's like the human race. It just keeps on growing and going and going and getting bigger and bigger. And so it's massive, Jack. And that's, again, what keeps me up at night, is that I feel like, to some degree, my dream was to be, and I stated this, I mean, you call it a mission statement, the 3D model factory of the world. I actually think that we're knocking on the door of becoming that. And if you think about the responsibility that goes with the 3D model factory of the world, I mean, it's a little scary. I don't know if that's, I mean, I'm just being honest.
I'm thinking from an investment standpoint. I'm like, if in other words, if NexTech, gets that, becomes a 3D product model, factory of the world, pure play on this. Once the market realizes that, as this kind of become, because right now we're talking about it, we're in the early stages, right? It might once it materializes, like, oh, it's almost like your 3D models. And, the AI conjures, all of a sudden it takes shape. It might be 6 months from now, but by then, I mean, I don't want to make projections. Again, I can't make projections about the stock, but I think at some point the market, once people do realize, the company would have a very, very different valuation than it has today. And we're already starting to see the tech stocks, all those stocks that dropped 90%, the DraftKings, all these companies, the Fubo, by the way, one of our former Next super stocks that went to the New York Stock Exchange, Fubo, it was $60, now $2. But now a lot of these stocks are coming back. They're making comebacks. Teladoc, ARC, and
there's no, where we are to, again, I feel like it's just hard to explain. We're talking about, again, I was talking about this today with, like, my employees. It was like we've been in the desert, biblical, right? Searching. And now we've come to the promised land, right? I mean,
not yet. We're just outside the promised land right now. The promised land is when you have, a million models.
We can say we're in the promised land because we do have the whale of whales, and we do have a lot of other clients. And so, and I can tell you this, I'm going to say that when we get interviewed, and it is an interview, I jump on these calls, it's me, my executive leadership team. So there's like 6 or 8 of us, and they're interviewing, the Walmarts of the world, the Amazons of the world, they're interviewing us. And I'm explaining we're pioneers, that we're really the last ones standing, that all of our competitors have essentially tapped out. And
this is just like 2003. Amazon was left standing. Everybody else was gone. I mean, the same thing.
Right. And they don't disagree, by the way. They don't say, oh, that's like a little too much. Like, we actually talk. No. In the world of 3D modeling, our competitors have essentially left the room. They've decided it's too difficult. It's too difficult a nut to crack. It's not something that they get to the point where it's like, okay, how many models can we produce, and how much is it going to cost us? And for our competitors, I think the equation just didn't make sense. For us, it's quite different because of the technology that we use. And ultimately, again, it's setting us up to be that 3D model supplier for, again, not just e-com, because that's really what we talk about on the show, and that's what we talk about in press releases, and that's really, you know, like, okay, yes, but it's really the metaverse, which includes VR, which includes, you know, AR, which includes our wayfinding. It's really much bigger than just e-com. I mean, e-com is massive. I don't even know why. You know, beyond
e-com is the first kind of most obvious use case where you're showing, you know, real numbers where people can see immediate advantage, you know, increased sales, lower returns. And, you know, I think one thing, you know, today, I think like today for the first time, this is the first time you've actually mentioned, you know, the three companies that, you know, you're doing, which is, you know, you got Amazon, now Walmart. Are you getting paid by Walmart yet, or you're still in the early stage? In other words, this is still like in the pipeline, or they have a customer?
It's ahead of us, but it's let's just say it's getting closer. Look, we did the biggest whale. Okay, like I said, if that was our only customer, we'd still be massively positioned. But obviously, if we could land them, there's no one we can't land. Right?
Yeah, no, it's massive validation because everybody knows, you know, I mean, Amazon, best of breed in e-commerce. If Amazon does something, if they're using a certain technology, if they're doing, everybody goes in that direction. That's the, you know,
they're professionals, but they're also partners. You know, professionals don't just like, you know, buy a product and then say, you know, see you, thanks. You know, they actually sit with you, talking like Amazons of the world, and say, hey, what else are you guys working on? And we're actually starting to get to different conversations where it's like, show us your tech, show us that AI that I was talking about that creates, you know, 3D assets. Like that's the kind of thing that gets the you know, these big marketplaces super excited. And as you mentioned, a lot of these companies get bought out for much higher valuations. I'm not saying that's happening. I'm just saying, like, I wouldn't be surprised if something like that did end up playing out over a period of time. Again,
yeah. I mean, let's say, okay, let me ask you this. Okay, so let's say, and then we'll jump into the baby unicorn spin outs and all that, but and then we'll get to the audience questions. So what would it take? I mean, what would it take to get to, you know, 50 million revenues annually with, you know, with 3D models? I mean, not even 50, to get to a run rate. So let's say to hit 4 million, 5 million a month revenues with 3D models. I mean, what needs to happen? Because I mean, I think everybody can do the math. If the company is doing 50 million in revenues, you know, we know what the multiples are, you know, in the tech market. So, you know, and they can figure it out what that means for the stock. I don't want to say any prices. I don't want to, you know, but what needs to happen to get to 50 million?
You know,
which is nothing, by the way. 50 million is like peanuts.
So it's a scale, right? So when you're dealing with the big boys, obviously, you know, they want a discount on the price. But if you're dealing with, so you know, let's use Kohl's as an example. So if we're quoting on 110,000 SKUs, you know, are they going to pay us $25 per model per month? No. Are they going to pay us 10? Maybe. But here's where it gets interesting, Jack. And this has already happened with 2 customers and soon to be more, is that we have a special relationship with Amazon. It is special. It's not just, again, like, you know, just give us models. We're partners with them. We're helping them. They're not fully formed with this whole 3D modeling thing. We're actually lockstep with them. And so what does that mean? We've brought 2 customers that we signed up on the Shopify platform, nothing to do with Amazon. And we've made them models. a couple hundred models, and there are paying customers. And we asked them, hey, do you guys have an Amazon store? Yes. Would you like us to get your 3D models on Amazon? Absolutely. Okay. It's going to cost you another additional $10 per model per month. And because of our special relationship, you can't do it yourself because Amazon's not open for everybody to bring their 3D models on. We can bring you over the fence. They said, let's do it. Now that's two customers that we just, this is just the beginning, where if you think about what I'm describing, we're getting paid to essentially, host and make their 3D models for their existing website, their Shopify site. We're getting paid again. So we might get paid, let's just say it's $10 or $15 or $20 per model per month from a customer. And then we go back to them and say, pay us another $10 per model per month and we'll get you on Amazon. Huge value for them. We're the only ones who can offer that because we have that relationship with Amazon. So it's not like they could go anywhere else. But from NexTech's perspective, that extra $10 per month is pure profit. It doesn't cost us a penny because we've already made the models. Now, in Q4 of this year, told Amazon's going to open the floodgates and allow
Q4 is when they're going to.
Or you never know. It could be Q1 with Amazon, but anyway, when they open the floodgates, what that means is that you'll have the ability, if you're on Amazon, to bring 3D models onto the site. NexTech's going to be a preferred partner. So all the millions of merchants on Amazon now are going to be potentially coming to NexTech and saying,
there's a lot of catalysts. The thing is, there's a lot of catalysts right now in place. I would say for Q1 of next year. So we're about 6 months away. So in other words, you got the Amazon ramping up. We have the glasses, which is that on the horizon. Some of the glasses we're expecting the glasses from Apple, or we got a couple of other things. There's a bunch of other things that are going to be happening. The next 6 months. So there's a lot of things that are really lined up right now, which I think is what makes this so compelling.
I think a big thing, again, that's underappreciated. I mean, I'm super excited as the largest shareholder. I'm going to get a massive stock dividend in ARway.
Oh, let's talk about the ARway, and then we'll get to the audience questions. ARway, okay, which is, we're calling this the potential baby unicorn. And let's preface that by saying that ARway is going to be a spin out of NexTech, right? Yeah. And we've already seen how successful NexTech spin outs are, because NexTech itself was a spin out of what is it? What the hell is it called? A Future Farm, whatever, and became a 20-bagger plus from that initial price.
Yeah.
Now we're not making any projections or whatever, but there's sort of like a good DNA here. There's good DNA with spin outs here.
So having said that, it's a good segue. The spin out of ARway is going to have the same or extremely similar structure as NexTech did, right? So it'll be a 25-cent IPO price, let's call it. It's a direct listing. So IPO, direct listing, at the end of the day, it'll have its own stock symbol. If you own NexTech shares, you'll get shares in ARway for free.
Well, you're increasing the number of shares they're getting now, right?
Yeah, yeah. So it'll be something like a 4% stock dividend. Wow. That's something like a 4% stock dividend. That's quite significant. That means that if you own 10,000 shares in NexTech, you get something like what, 400 shares? Is that about right?
At 4%, that would be 400, right? Yeah.
So That's not insignificant. And, you know, I think
better than 1%, not even a point at the bank, right? You're getting 4% here.
Yeah, but the point is that that's free money. That doesn't include what we're talking about. We just spent 45
Right.
minutes, an hour talking about all this business that NexTech is going.
Oh wait, there's more. No, okay. So, no, I mean, this is. And here's the thing: people, we're making a joke. We're making a joke, but to give some context, okay. And we'll talk a little bit about ARway for anybody that's new. There's a full demo video from Paul.
More, Jack. I just want to say that, you know, again, we've announced that we do not need to raise additional capital.
Oh yeah.
That's a huge deal.
No dilution. Right. So okay.
Freaked out, like, oh, you know, they're going to do a financing, you know, blah blah blah.
No financing. No. This is it. This is fact, right? No financing.
No.
At least for the next, let's say, year.
No, let's just say no financing, period.
Okay.
Because I don't have any plans to do another financing. The only way it would happen is if some massive thing happened where it was like, yeah, we couldn't finance it. It was, you know, so much.
You're talking about potential acquisition. In other words, with the ongoing business right now, you have no need to finance. There's no need. There's no immediate, no intermediate, nothing on the horizon.
Correct. Okay. And I think that's a big deal.
Yeah, people are freaked out. Investors, they hate to see all these Canadian companies that keep constantly. They say they're never going to raise, and then they raise the week after. And the one thing, NexTech has never done that. In all this time, I've never seen this happen. So we got the spin out, which is the potential baby unicorn. And again, this demo videos which are online. But here's what's interesting. Right now, people are wondering, like, well, what is this? How much is this worth? What's the market potential? I'm already seeing it. There's a couple of companies. I'm not sure how legitimate they are. They might be kind of vaporware or whatever. But there's they're trading right now. They're at 50, 60 million valuation. And they're not any further advanced than ARway. It was Verse on Neo. VERS. The thing's trading at 50 million valuation. They got like 100 grand in sales or something. It's like,
yeah.
You know, but that shows the potential for ARway out of the gate, because the market is so excited.
Jack, that we have the most technologically advanced spatial computing platform that the world has ever seen. We're getting. We're in, you know, proof of concept stage with NASA.
The moon people.
Yeah, think about that. National Space Agency. I don't know what.
NASA. Yeah. NASA.
So they're testing it not for space, you know, but for their buildings, for wayfinding inside their buildings.
Oh, they got huge.
We have universities that are testing. So we have a list of about 15 massive opportunities. The government, the EU government, they're testing. Why? For public transportation, right? For public buildings. It's a massive problem. You know, look, when you look at wayfinding, Google owns the outdoor market. We are going to own the indoor. It's a huge opportunity right now. You know, navigation, wayfinding, it's like 20-something billion in terms of the market. But the indoor wayfinding is exploding. And there are some competitors. There's a couple of other companies that are out there. There's one company that I found, a Danish company, that's worth $250 million. And their tech is no better than our tech. In fact, I would say we're going to leapfrog them in terms of technology, because they don't really have the whole augmented reality metaverse piece. And just, again, so our investors understand, ARway is going to be integrated. It's not just going to be standalone, meaning our Map Dynamics, which is a mapping software, is going to have an integration with ARway, which allows you to make a map without having to go into the field and actually spatially scan a space. Our content management system for 3D models. Imagine we go to an Amazon or one of these big players that we have really strong relationships with, and we say, hey, we have a new technology we're rolling out. It's an SDK. So let's be clear. It's not our app. It could live inside the Amazon app. It literally could live inside their app. It'll look like it's Amazon tech. Imagine all the 3D models that we're making, that they've made. You know, they have lots and lots of 3D models. All of a sudden are now able to be populated in your living room, where you're shopping in a totally different way, where you literally scan your living room. It's like taking a video of your living room. And then you're able to point on a screen in the Amazon app as you're looking for furniture or whatever you're looking for, and place not just one product, but multiple products into a room, and literally stage the room, and everything's to size. And then you just click buy. And then as Amazon does so amazingly, they ship it, and it, you know, it shows up at your house the next day. Imagine that being repeated over and over again, not just with Amazon, but with everybody. That's the new way of shopping. You're no longer, and just to be clear, so today, the way our tech works for e-com is you can put a single product in your room. I'm talking about where you're physically standing in your room, and you could visualize a bed or a couch, what have you. Tomorrow, with ARway, you're going to be able to put 5 or 10. You're going to be able to populate a room with as many assets as you want. That's a completely different way of shopping. And it goes way beyond the e-com. It goes, you know, museums is probably my favorite use case, because they already have all the audios. So, you know, we're working on creating an API with Spotify. So imagine you're a museum.
Okay.
Your audio.
You also rent somebody's dirty thing with their headphones. You can use it right on your own phone, and then you can take the experience home with you.
That becomes obsoleted overnight. Where now all of a sudden you walk into a museum, you scan a QR code, you get the museum app, and the next thing you know is, you know, you have your earpods in, or you're just listening. As you get close to a painting or a statue or a fossil, dinosaur fossil, it doesn't matter. As you get within 10 or 15 feet, the audio starts playing automatically. This is all happening through the ARway app. Now, as you get closer to the whatever, the painting, the sculpture, the fossil, you'll hold your phone up. In the future, it'll be the glasses, and there's an augmented reality experience that starts to unfold in front of you. So it's now immersive, where it's taking you, maybe, you know, you have a hologram of the you know, the actual artist that shows up, and they start talking to you.
Potentially, you could also share it, right? Because it's on a phone. You can share it with your friends on social media. This is, I mean, you know, like right now, there's so many potential applications. I mean, this is like, you know, it's literally almost like the internet. We didn't know what it was capable of, you know, when the internet first came out, and now with this new Web 3, you know, we had Web 1, Web 2, which was social. Now Web 3 is this AR.
There's millions of museums and hundreds of millions of artifacts. All of that is ripe for disruption. I literally go to a museum and I'm excited. I always walk away disappointed though, because I know I missed a ton.
Right. That's, yeah, because there's always, because, you know, especially, you know, places that's big, like, you know, you don't know, like, you know, where to go, and it's like the map. It's like,
right.
If you have the phone,
they give you literally a paper map. And you like unfold, and you're like, oh, this way, follow me. I'm talking about wayfinding, where maps become a thing of the past.
And they're going to drive revenue, because, you know, the map is going to say, hey, by the way, here's the gift shop, and here's where you can have lunch. You know, and so it's going to give them, and by the way, this is sponsored by, I don't know, American Express, you know, whatever it is.
Exactly. No, that's exactly right. The whole experience could be sponsored.
They can monetize everything there. I mean, like, you know, literally, they're going to monetize everything, because they need to make money, right? Like, you know,
they're going to charge you for this, obviously. Maybe it's free, maybe it's just sponsored, but it doesn't matter to us. It's no code, no touch. It's all going to be happening through the SDK. and through the studio, where you have the spatial map and the museum could swap out content whenever they want. They can update and swap out. They just pay us. It's a SaaS business.
Yeah. And this is, you know, the great thing. This ties into the whole thing, which is
I just want to say
experiential. Everybody wants, yeah.
I just want to say this is imminent. This is imminent. This is imminent. I'm not talking about something 4 or 5 years from now. I'm talking about by the end of this month, August, which my birthday month. By the end of this month, we will be in market selling what we're talking about on your show. And then we will be public. I'm talking about ARway in hopefully September, could possibly roll into October, but it's not going to be like, you know, a long time from now. We're talking 60 days. This is now. This is imminent. This isn't something that's happening, you know, years from now. And I mean, from my perspective, there's nothing stopping us. I mean, look, you know, I always use the past. I mean, a lot of, you know, what I do as CEO is trying to see around the corner, right? And trying to see, you know, what's not visible to everybody else and steer the ship to in a direction. So if we go back and we look at 2020 was kind of a preview to what's about to happen with NexTech. What do I mean by that? Well, if you go back to 2020, Jack, we had a video, you know, conferencing kind of platform. We were doing virtual events. And back then, you're talking about, you know, a business that was not really sustainable. We rode a wave, and you know the revenue.
It was a great opportunistic thing.
So it was a hot market. The revenue started to come in, and the stock, you know, went to $10. We talk about that a lot. Okay, so imagine that I'm seeing the same thing now starting to develop with 3D modeling and wayfinding. Imagine I'm seeing the same thing. Just like in 2020, I was seeing what other people couldn't see, right? And the stock took off. I feel like that's a preview of what is about to happen with our 3D modeling and our ARway wayfinding business, where I'm seeing the demand start to swell, just like with video conferencing. And then what'll happen, and this is a prediction, is that investors' demand will start to swell. It will go from, you know, just a couple of people on this call to all of a sudden everybody's going to be saying, where can I find a 3D modeling company to invest in? Right? I mean, that's what's going to happen in the future. And the same thing is going to drive our share price, because we're going to be able to report ongoing revenue quarter after quarter, again, with our 3D modeling business, not the legacy
E-Comm. Yes, and I think that's the thing. I think once we get that first or second quarter of pure play AR 3D modeling revenues without all the old e-commerce, that's going to be a game changer. And especially as people see, you know, those numbers increase.
Yeah. Yeah. And I think so, you know, we're there. We're knocking on the door as we walk. So the plan is to be completely done with the legacy business by the end of September, and really ramping up with our 3D modeling business in Q4. And as we roll into Q1, the floodgates should really open up in a big way. And the same thing, you know, ARway is going to take a little bit of time. Like, we're just now on the runway and getting ready for liftoff, right? We're just launching all of our tech. So that's going to take a couple of months. But I don't know, Jack. I'm just convinced that when I think back to 2020, I mean, it's the same company. I'm still
just like Amazon in 2003. It was the same company. The stock price was, you know, only 5% or whatever where it was, you know, a year or so earlier. And you know, they were just they didn't even have Prime, they didn't even have AWS, the cloud. They had I think they were still doing books at that point.
Yeah.
They were getting into other things, whatever, and a couple of other companies. I'm not just Amazon, but again, back then, you know, it took a couple of years for the market to bottom out. Now we're seeing things happen like lightning, like 2000. You know, with the pandemic, the market crashed overnight, spiked up overnight. And, you know, everything is becoming much more condensed. So I think we've probably seen the bottom of the market. I mean, we've already seen stocks starting to move. So I think it's only a matter of time before all of a sudden, you know, probably the next couple of months that, you know, we're going to see some, you know, explosive moves in big tech stocks, and that is going to, of course, lift everything else. And because, you know, right now nobody's watching. Very few people even watching stocks. I mean, that's why you know, that's why this announcement was kind of went unnoticed, because, you know, we've been in such a bear market. People have been so like decimated and capitulated that they're not. But now they're waking up. So this is like, I think. Let's get into some audience questions. Let's get audience questions, because okay. Very here we go. Important. Here we go. Is there a record date to get the spin out for AR?
Yeah, there is, but we have not released it yet. In other words, as soon as we have it, it will be released. It will be publicly announced. So I don't have it, but when we do have it, we will announce it.
Do you have any idea of like when that's going to be announced?
I mean, I'm going to guess. Don't put me to it, but within the next 60 days.
Okay.
Yeah.
Okay. Who are your non-customers using for the? Oh. Sorry. Is anybody using three? I'm not sure. Do you understand? I'm not sure if I understand the question.
I think they were asking like,
who's the competition? Maybe like who's
the competition? So, you know, look, there's this few little stragglers out there that make, you know, 3D models, but, you know, not significant in my view.
Okay. So, I guess a question about scaling up. Okay. How many? Did I ask this before? I'm not sure. How many? Okay. How many models can you produce, and is there a backlog right now?
Yeah. So there is a backlog. We are ramping up production. So it really doesn't, if I tell you, you know, we could produce whatever it is, 1,000 models or 10,000 models today, it's going to change tomorrow. It's going to change next week, right? Because we're ramping up our production. Ramping. Every day we're producing more. Every day we're going faster. So, you know, think about a car. We're doing, you know, 50 miles an hour, 51, 52, 55, 60, 65, you know, we're going faster and faster every single day. That's what's happening.
Okay. Is there a very large sporting goods manufacturer? What's happening on the sporting goods? Was that on our program you talked about a sporting goods manufacturer or somewhere else?
We have landed a very large sporting goods manufacturer. Look, I mean, it's very difficult on this show to talk about every single customer, every single deal. So I try and just talk about the biggest, but there's a lot of big deals that are happening. They're not the biggest, but they're big. You know, what does that mean? Maybe they're worth 50 grand, you know, annually. That's still big to me, 100 grand. And so, you know, there's a lot of those, and they develop, meaning they start out with maybe 50, and then they could expand to 250 or 500 over time. So there's a lot of those happening. There's a lot of those, you know, there's a lot.
Okay. So record date was going to be the next 60 days. We're saying, right? Next 60 days, we're going to announce that.
Yeah. So think of it like this. There will be a moment in time, hopefully in the next 60 days, where we announce that we've gotten the green light from the CSE to list ARway. There will be a date that we say, okay, we're going to be listing. And if you own your shares, you know, on this day, you're going to get the spin out shares.
Do you think that's going to create? I'm curious. Like, do you think that's going to create a flurry of buying activity around that time? Usually does. No?
Usually, I mean,
the stock drops, right? After the record.
You get like a bump and then the drops. But I mean, from my perspective, this isn't like a regular dividend because we're not dividending cash. We're dividending shares. So let's just say we dividend the shares out and the stock goes from 25 cents to...
It's better than cash. Cash is only cash. This is a potential baby unicorn. I mean, this thing can be, because we've already seen the past unicorns, the DNA. This is like, it's got the unicorn DNA in it.
So if this stock, let's just say, again, we're using, just numbers here. But if it goes to $1, from 25 cents to $1.
We're not saying that it will, but we're just in theory.
I'm using it as just an example. You could
don't want to get in trouble here, right?
Number. You could say 50 cents, 75 cents, whatever. But let's just say
1,000.
So remember, NexTech is going to own something like 12 million shares. So our company's value is going to go up with ARways. Your brokerage account is going to go up because, the stock went from 25 cents to $1 on your dividend shares. Plus, even when you just get the dividend shares, your brokerage account's going to go up a little bit. But NexTech stock, I don't think is going to go down because I think, there's upside potential, obviously, in the spin out. I mean, that's why we're doing it. We're not doing it because we think 25 cents is actually going
what's interesting is this, because we're already seeing some comps, right? I'm looking at, we're seeing some comps in the market that are trading, like 50 or 60 million plus, which is that Verse. You mentioned this Danish company, which I'm not sure about, with the 250 million, but let's just say the comp is 50 million for the, AR maps business, as I'm going to call it, ARway. So that means, and NexTech right now, the whole company is only, what's the value of NexTech right now? Fully diluted is like 50 million right now. No? 40. What's the fully diluted? What's the valuation of NexTech is it
60?
$60 million. Is that Canadian or US? US. So 60 million valuation, right? And inside of this, you have a potential thing that nobody has even put a value on, which is worth 50 million based on the comps. I mean, based on a comp that's out there. We're seeing this company Verse, VERS. Look it up. I mean, I don't think they're anywhere near as advanced as ARway in terms of revenue or market traction or anything else. But it just goes to show you that what the potential possibilities are, right? So, in theory, we're seeing what in theory. I think this means NexTech should be worth, I'm not maybe double or more based on just this unicorn popping out.
I mean, I'm not going to put a number on it. I would just say that when you think about
in terms of the comps, I mean, it's like you have this thing which we have a direct comp out there that's 50 million plus. You're doing a spin out that's worth potentially could be the same, right? Because it's the same, very similar. I mean, they're a little bit different market, a little bit different whatever, but it's almost like saying, I don't know, Microsoft Cloud versus Amazon Cloud. I mean, of course, Amazon is better because, you're doing business. But, it's the same stuff, more or less, right?
Yeah. I mean, look, it's a very interesting time. I mean, from my perspective, we're pretty undervalued. And from my perspective, it's only a matter of time. Like, I'm kind of thinking that what's going to happen is pretty much inevitable. And that's a very different place than where I was, earlier this year or even last year, where it's just an inevitability that, the die has been cast. The die has been cast. Things, I don't know, there's so many, trains left the station. I mean, how many different ways can I say it?
Things are moving.
Things are happening in the market, and now it's just a matter of time. When, the biggest fish in the ocean are all of a sudden changing their diet to the thing that we're making. I mean, it's like, okay, how much can we make? And it's not just that one fish. It's all the fishes in the ocean. They're all changing their diet.
Sharks, everybody. They smell in the water. They're all coming. It's like one of those it's going to be a massive feeding frenzy to get these 3D models. It's like, Yeah. All right, Evan, on that note, let's wrap up. Thank you for the update. I think it gives people some added clarity. We're looking forward to more news on ARway, more big contract developments.
I just want to say, Jack, that the reason why I love coming on Jack's show is it gives me an opportunity to give our investors some real clarity about what they're invested in. There really isn't any other platform that's so open, right? Where we could just talk. It's kind of free flowing. I mean, we're definitely, dealing with the business, but there's a lot of conversation that's happening here that you really don't get anywhere else. And so it really is a great platform, and I'm glad that we could leverage the Wall Street Reporter. Now, this isn't pumping you, Jack. I was
going to say, I'm going to have to give you 10% of all future business.
I mean, you do enough pumping of yourself. Like, I don't need to pump you. I'm literally just saying that, like, it's a great platform for investors to get the real story.
Yeah, thank you. I appreciate that. No, because I mean, look, we don't have any time limits. We're an hour, 60 minutes. Not like one of these 15-minute thing where you have a newscaster, weatherman. Say, hey, what's 3 quarters? Yeah, the idea is, I mean, again, the goal is we want to have investors. We want to have full transparency where people can make an informed decision. Because the more people understand a story, the more the true value of a stock comes out. That's just the way the market works. It's all about transparency. So, Evan, again, thank you. Thank you, everybody, for joining us. We'll see you all on the next live stream.
Thanks, guys. Thanks, Jack. Bye.